What's up, traders? It's 10th of October, Friday, 10 p.m. Let's do a quick review of how the week played out on euro dollar and pound dollar. Euro dollar, this is January, by the way. This was January low. Since then, we've just pushed up every single month. It was likely going to find some kind of resistance at a certain level, which it did last month at this sell side liquidity equal highs on the weekly time frame below a fair value gap on the monthly time frame. Look how price tapped that level and just completely rejected. We also had this pause candle before that, or essentially an accumulation if you want to call it, and on the weekly time frame that was a channel with RSI diverging or divergence, which came at a very extended leg. So, and also we had SMT with GU, so a lot of factors were playing into price finding some kind of resistance around that level. It's just a matter of how deep was that resistance going to pull, because it's not like, you know, it could drop all the way down to this low, it could not. It just has, I cannot tell what it's going to do, but I can go by day and week by week and make predictions along the way. So going into this was previous month low, not previous week low. This week, so the candle closed quite bearish, and I managed to take 2 trades. It was on GU, and I took 2 longs on when price were just bearish every single day. So let's just dive into euro dollar to start off with. So weekly time frame, we closed with a bearish engulfing candle. To me, right, price rejected this high, put in a bearish engulfing candle, took out liquidity here, then put in this bullish candle, inside bar candle. You know, I would have expected price to continue higher if you wanted to be bullish, or at least not be so bearish the week after, which this week was very bearish. So if we see another bearish candle next week, I do predict that we could continue lower into these lows. And yeah, so going into next week, I'm bearish. This bearish candle suggests to me that we are bearish, and on top of that, my prediction of price wanting to come to this fair value gap on the daily time frame below this swing low, when it was just chilling around this area rather than up there and then bouncing off, is finally playing out. So yeah, I was predicting price to come down to this low, and I was correct in that prediction because it's now down to that low. It's just that my prediction was around here, not after rejecting those highs and then coming down. So that's a good lesson, because like there's a lot of liquidity around these areas. Essentially formed a channel inside here, boom, shot up, took out liquidity, failed to push up, microstructure shift, pull back, resistance, dropped. This is what I'm saying about the weekly time frame as well. Put in this bullish candle after rejecting a quite nice point of interest, then failed to continue higher, put in this low wick candle. To me, that showed that, okay, I wasn't 100% confident on whether it was going to continue pushing up or continue lower. And then the day after that was a bearish candle, and to me, after seeing that, was suggesting that, okay, we might continue lower. It's just the fact that we had so many, we had this previous month's low right there, we had all of these lows that price had previously grabbed liquidity off before pushing up. So there was a lot of support going on over there, which was one of the main reasons I didn't want to short. But I did have a prediction that price was going to come down to this daily time frame fair value gap that it had previously rejected and shot up. It's just that I don't have the confidence to trade that, and because of that, it wasn't really trading any short, even though there were a lot of opportunities to go short on this and on pound dollar. But I did go long. One other thing today, which we do Friday analysis, TGIF setup was imminent, or potential TGIF setup was likely to happen because of the way price moved down. We had so much liquidity below this low, came and tapped into this daily time frame fair value gap that it had previously rejected. But for me, I want to see price come into the 50%. I do want to go long around this 50% level next week, and yeah, when is it going to come down to that, I don't know, but I do think we can pull back into this range somewhere and find some kind of a resistance before pushing down. I think that would be a very good trade. But let's see how today played out. So we dropped after yesterday. This was a good area to go short after this bearish engulfing candle. Like I said in my post market analysis yesterday, pushed down right? We pushed into a level, we had this accumulation, we had this accumulation as well, and just a lot of accumulation going on before price dropped down with this bearish engulfing candle. And that, after seeing that, I was predicting price to find some support. However, I wanted price to drop down one more time to form a channel, right? And then that would have given me the RSI divergence, would have given me the free test channel on the 64-hour time frame, even better. But it just pushed up after testing this daily time frame fair value gap. So to me, I wasn't really predicting price to push up that high. It did, so just what it is. Let's see the way it pushed up though, right? We bounced off here. It looked like, because order flow is bearish, you know, you'd expect price to continue lower. It came up to this high, grabbed liquidity, pushed lower, and then we had this market structure shift, which if you were in a bearish order flow, right, this probably would have caught you, and then pulled back into the 618 and then gone short, and then boom, price shot up and took you out. Luckily, I'd already taken my 2 trades for the week, so I couldn't even take this trade anyway, and I wouldn't have traded that because we just rejected quite a nice level, on top of the fact that TGIF was in play as well. So there was no way I was looking to go short, and I would have gone long had price dropped lower one more time. But again, here price is doing its bits, pushed up, tried to push lower with this bearish candle, failed with this very sharp bullish candle, pushed into this high below this fair value gap, and that does look like an area for price to find some kind of a resistance. Maybe we'll push up one more time. This is the kind of trade I took a few weeks ago or last month, where I was in a bearish order flow and price did exactly this, and then came up and then came down to this low and pushed up. So we might see something like that next week before we come down to this 50% level, because on the daily time frame, you know, if you're expecting price to pull back into the 50% of that range, then let's let it pull back into the 50% of that range. Why be in a rush? Don't want to trade Monday anyway, so let's see how Monday and Tuesday play out. Ideally, it shouldn't go higher up, right? Because we grab liquidity of this high, then put in a market structure shift, and price has pulled back into quite a premium above this high, where it immediately found resistance. And to me, you know, it does look like we can take out this high and then drop lower potentially. That I do think that's a good play, and that price can play out. But it's Monday. I don't want to trade Monday. I don't want to lose my 2 trades on day one. I want to savor them for later on in the week, and if that means I get to take 1 trade because I don't get a clear setup, then it's just what it is. Another thing that would have made me go long on pound dollar, not euro dollar, is this SMT. We had divergence with EU on GU at quite a key level. I'll go into GU now, but it was at quite a nice point of interest, so let's dive into that. Pound dollar today came into this inverse fair value gap on the daily time frame. If you look at this, right, it's quite a nice level, to be honest. The range we see from this low to that high, from where FOMC rejection happened at that high, right, we dropped into the 618 below this low, found support, pushed up, failed to continue higher, especially price, you know, ranged around here, this bearish candle. You thought, oh shit, we're going down now. Boom, fails with a bullish engulfing candle, and another bullish engulfing candle on Monday, thinking, oh shit, that bullish engulfing candle failed, so that we're definitely going higher now, because that's what I was thinking. Then fuck no, bro, another fucking bearish candle. And after seeing that, it was kind of like, okay, cool, maybe we're not actually going to continue higher up. But on the 240, a flag was forming, a channel formed in 1 hour, and I took a long there. That's on a Wednesday, my Wednesday video, that if I want to watch how that trade played out, I took it while I was doing my end of day review. I took it live on as I was recording this, so go watch it because it's quite informative. However, I took another trade the next day, quite cocky, because look, man, our bullish order flow was bearish and I knew it, but I had already made some money the night before, or gained some confidence from my winning trade the day before that. I was very aggressive the next day, and yeah, this is where I took the long, this bullish engulf inverse fair value gap after price tapped into it. Yeah, and then price came into this inverse fair value gap, quite a nice level on the daily time frame, because that's a very good level below all of these lows, inside that big range, and then found support immediately yesterday, Thursday. Right, this is the accumulation, and then boom, dropped lower. That's the 5 a.m. candle. That's the London. Oh, okay, that's the 10 a.m. candle. That's quite late, isn't it? And again, if you look at it, these candles, I would have been expecting a bullish engulfing candle after seeing all of that. 1 hour time frame, again, catching all the, this swing low grab right here would have caught so many traders thinking it's going to go up now. Boom, dropped one more time, SMT with EU. That would have been a very good long just around that level as a counter trade. However, like I said, and especially price grabbed liquidity off this low and shot up. I'd already taken my trade, and most likely, to be honest, it's not a channel at a level, and I'm not really interested in taking trades that are not channels right now. Channels and the key levels are much more significant than just, and also profitable for me than me trading area patterns that I'm not very confident with. Look at this. This was a 60-minute channel, RSI diverging, and I took a trade here and I exited here. And then this was a fucking stupid channel because price had already started to close below this. RSI was not even diverging. We're not in the key level when key level was down here. So yeah, that was on me, and that was not a very good trade. So I'm okay to take a break even. It was a minus 0.2% loss, but I accept that. That's just part of learning for me. And that meant I couldn't trade next day, and that was okay because I don't want to do too much work first of all on the weekend. I don't want to review too many trades. I don't have the time to review too many trades, and to be honest, I don't have the time to check the charts continuously every day, every hour of the day. When I know there's something playing out, then I'll make sure I put time aside in my head to be checking charts more frequently. But when I know I've already taken my trades and there isn't much going on in the market, I would rather just not pay too much attention. So let's see how next week plays out. I'm bearish going into next week. Look at that, bro. Yeah, again, failed bearish bullish engulfing candle. So let's see. I do think we could come back up into this range somewhere and then push lower. I reckon we could just push lower from somewhere around here. So let's see what next week does.